In this session, we're going to get into tops and bottoms and ranges. What do you do when a stock seems to be trading in a general range? I think you'll like it. So as I go through these, I pulled up some chart patterns. I did this about a week and a half ago. We're going to look at many of them. We're going to look to see where they are currently today, to see if the pattern I was working on, the pattern that I identified a week or two ago, held up. I got to admit, I'm crossing my fingers here a little bit on some of these to see, and they won't all hold up. Let me just be real clear on that too. They won't all do what you think they're going to do. This is not guaranteed stuff here by any stretch of the imagination. But in this particular case, what I'm looking at on AES is I wanted to point out that there is what I would consider to be close to a triple or even a quadruple bottom here. So what that tells me is that when I see these two lined up here, if the rest of this had not happened yet, when this pull down came, if this was something that I had already done some analysis on, it was something that I felt comfortable owning, I would have been buying when it came back down around into this area. And I would have been doing that because my risk here was relatively small. In other words, if it broke significantly below that bottom line right there, I would have taken my stop, and I had a nice reward ratio in this case. Now, quite honestly, looking at this, so that line, if I had bought back down in here, I could have very well been stopped out on this one. Okay, just full disclosure. But I am looking at this now in a general range, and if AES pulls back down into this area somewhere, I'm going to look to be a buyer again, because each time it's rallied, in this case from $10 up to about $13. I would look for that to potentially happen again. Now, I want to go through the psychology of these things, these double, triple bottoms. They're very powerful patterns. They're called a bullish reversal pattern. Now, I'm going to state some success rates here. This has a 75% success rate. Now, most of these stats come from a book called Steve Nissen's Candlestick Research. Steve Nissen is the guru in candlesticks. I'm sure you can find it online now. Back in the day, I bought the book. It's about this thick and it was a couple $100. Anyhow, at the end of the day, it's a very good book. It goes into lots of patterns and it gives their general success rate, but where there's a little asterisk there. The success rate talks about the average gain and loss. So normally when this thing bounces, it bounces about 21%. If it breaks down, it goes down about 6%. In other words, if it's a failed pattern. But again, keep in mind, I'm not focusing on those minor statistics. I'm looking on the big picture of, more often than not, when you come down to that bottom, you do tend to get a reversal. That's what I'm focusing on. So the psychology behind this is that when we get down here, those people that are selling, they fail to sell it through a key support level after multiple attempts, attempt 1, attempt 2, attempt 3. These people are selling their shares. They've got either a fear that it's going to go lower, and then once it gets so low, they say, yeah, I'm not selling down here. I'm not going to take that kind of loss. I'll hang on to it. And or at some point, the buyers come in and start saying, hey, this is a good deal. I want to own it at this price. And this is where the whole pattern and the psychology thing comes in. If I'm a trader and I see that, gee, last time it bounced off here, it bounced off really nice, I am much more likely to be a buyer here now. And again, as that dips again, I'm much more likely to be a buyer there again, because it's at a price point, unless something has fundamentally changed about the company, it's at a price point where, ooh, I'd like to own it there. So with all of these, the trade idea is I'm looking for a 3-to-1 risk to reward. I'm going to want to buy as we get down into this area with a tight stop, but I need to make sure that the reward potential that exists is going to be at least 3 times what my stop would be. So I'll also show you, I've got AES there. Let me go back because I've marked a couple other. I want to be able to show more than one particular pattern. So this is Lockheed Martin. Okay, so Lockheed Martin has hit these highs multiple times. Each one of these bars is a day. It's hit these lows and bounced off those lows multiple times. Now, this is what this pattern looked like when I drew it a week or so ago. This is where, fingers crossed here, I'm going to go to the current chart on Lockheed Martin. It's still holding up the way I would expect. It has not exceeded or broken out of this range. And if I own Lockheed Martin shares long right now, I'd be saying, geez, okay, this might be a point that I would want to consider maybe selling that, because historically it has not been able to break to higher highs there. All right. Or we'll get into this in our next session. Perfect opportunity here. I sell a call spread. Now we're talking options. That's my game. And again, not going to get into that here today in detail, but this is when you can see and spot these patterns. There's a lot of ways that money can be made around those, and you can set up excellent trades with very small risk in many cases. So again, not going to go deep into that here today because we're not about the options yet. That was Lockheed Martin. Now we'll move on here. Here's another one that's range bound. This one is EDU, and similar story. In this case, this is definitely what's a range bound trade. So we've got this bar at the top here that we're just not able to break through. We've got a bar at the bottom here that we've come down, touched into a couple times, and then we rally right back up to this point. So we are trading a range between 42 and 56. So very nice range there to potentially be trading in. And again, I'm going to look at either doing an options play of some type when we get to this point, expecting it to go down, or if I own this long, I'd be looking to sell it here, or I could sell it short and look to buy it back down here. Now, I'm going to look at what EDU is today. Again, not real sure on this. Okay, EDU is holding up too. So EDU is backing off of that point again. Now, and that's on, at least before I started this session, we're in a pretty bullish day today. At least we were. So pretty bullish day, and it's still doing what the pattern indicated it might do. So to me, that's gold. SLB, Schlumberger, let's take a look at it. So Schlumberger had been in one of these patterns too, just back and forth. Let's see if that is still playing ball the way I would hope. And it is. So it's continuing to back off this, coming back down, potentially into this range. So that's what I love about patterns, is the more and more people that see these and recognize, oh, it hasn't gone through this before, it may not go through it this time. And what can I do about that as a trader? How can I make money by knowing that? How can you make money with a specific pattern? Those of us that are options traders, it's pretty straightforward. You sell a credit spread, a call credit spread, maybe above the top of the channel. You sell a put credit spread below the bottom of the channel. If you do those at the same time, that's an iron condor. There's lots of other ways, but that'll just give you some general concept ideas as to how you might consider trading something like this. And in our next session, we're going to get into some chart patterns that I think you're going to find a little interesting.